Okay, so without further ado, let's make a start. So, chapter 1 is all about identifying costs. Okay, but before we do that, we're going to look at some of the differences between this field of accounting compared to what you've covered so far in your studies. So far in your studies, you've been learning about bookkeeping, which is the process of recording financial transactions. Information that's recorded will be used by the business in lots of different ways, such as preparing financial statements, and this is known as financial accounting. This unit, however, is concerned with another aspect of accounting called cost accounting or costing. Costing is just a small part, really, of a much larger discipline or study area called management accounting, which you'll learn about as you progress through your accounting studies through level 3 and 4. But for now, we just need to be aware of the similarities and the differences between the two areas. So I've listed those on screen for you, and we'll just go through those in a little bit more detail. And we're going to have a look at, there's going to be a quiz at the end of this. So obviously, do what you can to take in the information. So financial accounting, the purpose of financial accounting, as we've said, is to prepare financial reports such as the statement of profit and loss and the statement of financial position. Financial accounting is concerned with recording transactions, and you're all involved in that as you work through your bookkeeping units. So the reports that we prepare for using financial accounting will be prepared from historic data. If you think about your statement of profit and loss and your statement of financial position, they're prepared at the end of the financial period, usually at the end of the year, and they're reporting on what's gone before. So we're using information from what's happened in the past. We might report on the profit for the business over the last 12 months. Or the statement of financial position is at a particular point in time. So it's using those historic costs. And it reports on actual costs and income. There's no estimation really in financial accounting. It's all based on known figures. And reports will be prepared in a specific format. There's a very specific format in which the statement of financial position, statement of profit and loss need to be prepared. Okay, that is governed by a statutory regulation known as the Companies Act, and that determines how reports need to be prepared. Financial accounting is all about preparing information predominantly for external users. Okay, so that might be people who are investing in the business. It might be people who are already invested in the business and want to see how their investments are doing. And external users such as the government and HMRC who want to make sure that the business is paying the right amount of tax. So financial accounting is predominantly about preparing information to be used externally from the business. Management accounting, on the other hand, will be used for planning, controlling, and making decisions about business activity. When we're using management accounting, we will be classifying costs and income in lots of different ways in order to the purpose that we need that information for. And unlike financial accounting, we will use both historic and future data. So what that means is that we'll be looking at what's gone before in order to then predict what's going to be happening in the future. We tend to make forecasts about what's going to happen in the future and prepare budgets. So obviously that's not necessarily always going to be accurate. So we might use estimated data when we're producing management accounts. So we'll use actual and estimated cost data. Management accounting reports can be in any format, okay? So it's whatever suits the user of that data. It doesn't have to be in a prescribed format as you would expect to see with our financial reports. So management accounting reports can be in any format that suits the purpose that they're going to be used for. And those management reports will tend to be used internally. Okay, there might be occasions when, say, if you're applying for a bank loan, your bank might ask to see recent management accounts, but they tend to be for internal purposes only. Okay, so I'm just going to have a quick look at the chat. Can I see any chat coming through? Okay, nothing so far. Okay. So thinking more about costing now. So the primary purpose of costing is to calculate the cost of a firm's output. In a manufacturing organisation, that output will be the products that are made. So for a company like BMW, the output will be the cars that are produced. For a company like Colgate, it will be the tubes of toothpaste or bars of soap that are produced. In a service organisation, the output will be the services that are performed. But for all organisations, it's important to keep a close eye on costs, and a costing system will enable this. By calculating the cost of output, an organisation can decide on how much to sell their products or services for. And the price set will need to be in line with that of similar products or services that are sold, whilst ensuring that all costs are covered and a profit is made. Most importantly, obviously, that's the key focus for all businesses, isn't it? It's to make a profit. Cost information will also be used to value inventory and provide information for financial reporting. By understanding where costs come from, management will be in a better position to plan the activities of the organisation, make decisions and control costs. Okay, so I'm going to launch a poll question now. So we're going to launch a poll screen. So what this should do is generate a poll screen for you to answer some questions on. So hopefully this will work. Let me get the right one. Okay, so I want you to tell me which of the following statements relate to management accounting. And we've got a number of different options there. I'll give you a clue. There's more than one correct answer. Okay, so feel free to have a vote on that. And then once you've clicked on your answer, then you can submit it. Then we can view the results. Okay, so I could see that some of you had answered in chat, which is fantastic. Thank you for doing that. Yeah, and you're absolutely right. Management accounting provides information mainly for internal users. It's not a legal requirement, and it may use forecast data. Obviously, it's financial accounting that has a prescribed format for reports. For management accounting, we can use any format. Management accounting will provide information for internal, not external users, and it's governed, and management accounting is not governed by statutory regulation. Okay, another quick question then. Put some different types of reports on screen. I wonder if you can tell me which report relates to management or financial accounting. So if I just read through them, if you can type MA or FA, depending on what you think into chat. So statement of profit and loss for the year ended 31st of December 24. Is that management accounting or produced by financial accounting? Perfect. Thank you. Yeah, it's one of our statutory reports, isn't it? It has to be produced by a limited company. Not a requirement for companies that are not limited, but they will still usually produce some form of financial report at year end. What about a report on budgeted labour costs for the next quarter? Do we think management accounting or financial accounting? Yeah, absolutely. Yeah, budgeted costs. So they're not, they are what we think costs are going to be. They're not actual costs that we are reporting on there. And it's costs for the next the quarter. So we're forecasting data there with that report. And what about monthly profit forecast analysed by retail outlet? Yeah, again, management accounting, isn't it? The forecast again, so we're not using actual data or past data, we're using future data. And then finally, statement of financial position for the year ended 31st of December. Financial accounting, of course, it is. It's one of the reports that needs to be prepared for our external users based on historic costs, based on what's gone before. Perfect. Okay, thank you very much for that. So let's move on then. Okay, So we saw earlier that cost information will be used by management to help them make decisions about the business, to plan business activities, and to control business operations. Take a look at some examples of how a business may use management accounting information, which I've given you on the left-hand side of the screen there, and try and decide which purpose the example relates to. So, for example, if you think that an example of, say, decision making is number 2, then you would answer 2A or A2. So I'll give you a couple of minutes to match those up. So our examples are using cost information to forecast costs at different levels of activity. Does that relate to decision making, planning, or control, do you think? Excellent. I can see some great answers coming in there. What about comparing the actual cost of labour for the period with the budgeted cost? Do you think that's an example of decision making, planning, or control? Then establishing the cost per unit at different levels of activity for products X and Y, and then choosing to make X. What's that an example of, do you think? Yeah, absolutely. I think we've got some great answers coming in there. Let's have a look at the correct solution. See if you were right. Okay, yeah. If you don't get things right, it's not a problem. It doesn't matter. We're all learning about these topics. I sometimes think that when it comes to management accounting, some of these answers are slightly subjective. But the more you practice them, the more you read about the topic, then the easier these things will become. So using cost information to forecast cost at different levels of activity is an example of planning for a business. Comparing the actual cost of labour for the period with the budgeted cost is how we might control costs. Obviously, comparing our actual costs with budget and then taking action to control those costs in the future is a key operation for a management accountant. And then finally, establishing the cost per unit at different levels of activity and then deciding to make X is an example of making a decision. We've decided to make X instead of Y. Excellent, well done. Thanks for getting involved in that. Okay, moving on to cost classification now. So to aid the organisation in planning, controlling and making decisions about their activities, costs can be classified in a number of different ways. The methods used will depend on the type of business and what the business wants to achieve. And the methods that we're going to be looked at that are relevant to not just level 2. We continue to use these cost classification methods throughout level 3 and level 4. So they're a really key foundation to your knowledge for management accounting. We're going to be looking at classifying costs by element, by nature, by function, and by behaviour. So I'll give a little bit of information on each method, and then we'll look at a worked example as we've just done, just to consolidate that knowledge. So classifying costs by element is probably the simplest method of classification. Costs are categorised as relating to either materials or labour, and then anything else that's not material or labour is classed as an expense. We sometimes refer to expenses as overheads. Okay, so I'll use that term interchangeably. This method of classification applies across all business types. The raw materials and components used to make products, items purchased for sale in a shop, and items used in providing a service are all classed as materials. Within that, we can also include any consumable items here, such as oil for lubricating factory machinery, fuel for the delivery van, or materials used for packaging products. All are classed as materials. Basically, if it's a thing and we can touch it, we can class it as a material. Labour costs, as you might expect, include anything to do with the payment of staff. So the payroll costs of the business, such as the payroll costs of the business. Labour costs will include the payment of workers involved in making the product or providing the service, as well as those employees involved in a support capacity, such as supervisors and office staff. It will also include basic salaries, along with commissions, overtime, holiday pay, and bonuses. It's worth noting here that we only include here the cost of that relates to people who are actually employed by the business. Anybody not employed, even though they're a person and they might be working at the business, if they're not employed, we wouldn't consider their cost to be a labour cost. So think it, for example, a contract cleaner. If they're not employed by the business, then we wouldn't include them within the labour costs. We would actually include them with everything else, with overheads. The final element catches all of other costs. So anything that's not material, anything that's not labour is classed as an expense. So you'll probably recall expenses from Introduction to Bookkeeping and Principles of Bookkeeping Control. These are the costs involved in the day-to-day running of the business, for example, rent, rates, insurance, and cleaning. Okay, so I'm going to give you a business example. Always think about the business that you've been given to answer the question about. What might be material for some business might be, for example, an overhead for others. So it's particularly important to think about the type of business that you're dealing with. Okay, I've given you a little bit of some hints there, just to remind you what each category covers. And we're going to think about a business called Tacatita. They're a takeaway restaurant serving Mexican street food, particularly relevant. I'm having tacos for my evening meal this evening. So quite a relevant example there. So I want you to classify the following costs by element. Again, we'll use the chat box. So I'm going to I'll read out each of these costs, and I want you to tell me if the cost is material, labour, or expense, okay? Let's make it easy. Let's just use M, L, and E as an abbreviation. So do we think the rent of premises is material, labour, or expense? Fantastic, yeah. It's not material, is it? It's not going to be used in making the tacos. It's nothing to do with paying employees or the costs of employment, so it must be an expense. Perfect. What about the wages of the chef? You're ahead of me. Labour, yeah. Wages of the chef, so it's a labour cost. What about the prime beef mince? The material, yes. I'm not going that fancy this evening. I'm having a fish finger taco, so no prime beef mince for me. What about employers' liability insurance? Yeah, slightly controversial, this one. It mentions employers' liability, so it might be something to do with the cost of employment, but in actual fact, no, it's insurance, isn't it? It's an insurance premium, so it's going to be classed as an expense. And then 12 cases of hot sauce. Yeah, it's a material, isn't it? We're going to use those or the business will use those in making their tacos. I won't be this evening. It sounds much too hot for me. Okay, thanks for that. All right then. Any questions about what we've covered so far? Seems a good point to pause before we look at the other types of classifications. Any questions from anybody? Okay, we'll move on then. Okay, so we're going to have a look at classifying costs now by nature. So to make calculating the cost of a product or service easier, costs can be classified by nature. A direct cost is a cost that can be directly associated with each unit of output. By unit of output, we mean the item that we're measuring the cost of. For a manufacturing business, a unit of output will be a single product. For service businesses, a unit may be the service performed, for example, the cost per diner in a restaurant, or the cost of providing 1 hour of service by say, an accountant. There's some rules when it comes to deciding if a cost is direct or not. So for a cost to be direct, it needs to satisfy 3 criteria. It must be essential for preparing the goods or services for sale. So, for example, a pen can't be made without plastic. Okay, so plastic would be an example of a direct cost for a pen manufacturer. Tax return can't be submitted without an accountant, or for some people it can be, but predominantly if you're using the services of an accountant, you will need the accountant to submit that return for you. The cost must apply to each and every item produced. It can't just apply to some of them. And it must be possible to predict the costs in advance. So they're the 3 criteria that we need to fulfill in order to decide if a cost is direct. Indirect costs are those costs that cannot be associated with a unit of product or service. This will include other costs of production not being identified as direct, and all admin and marketing costs. So as before, let's have a look at another example. Different type of business this time. So giving you, again, a little bit of a hint there, just to remind you what constitutes a direct or indirect cost. And this time we are looking at Time for Fit, who manufacture smartwatches, and we're going to be coming back to Time for Fit a number of times throughout today's session. Good time of the year, isn't it? Smartwatches tend to be used by people trying to start their fitness journey, and that's obviously what a lot of us are trying to do at this time of year. So I want you to classify the following costs by nature. Okay, so we have a number of different costs there. So first one is polishing cloths. Okay, so I'm guessing when they're making these smartwatches, they might need to polish some of them. They might get finger marks on them or grease or oil. So they might need to polish the materials. So do we think that's a direct or an indirect cost? Yeah, it's probably not the best example to use. We're not talking about like when you get a pair of sunglasses, and every pair of sunglasses you always get a little cloth with them. We're talking about something that would be used when we're producing the smartwatches. We won't necessarily use one polishing cloth for every watch that's made. So some watches might not need polishing, so we can't say that the cost will apply to every item. Is it essential for repairing the product? Not necessarily. We could probably get away with producing the watches without polishing them. They might not look very smart. So I think we would say that polishing cloths in this context are an indirect cost. What about the wages for employees in the watch assembly department? Do we think they're going to be essential to preparing the product? Do you think we'll know what those employees are going to be paid? And do we think that it will apply to every item? Yeah, I agree with you. Yeah. The watches need to be assembled, don't they? And somebody needs to assemble them, so that this cost will be direct. What about the presentation packaging? Every watch is going to go into a presentation case. Okay. Yeah, direct again, isn't it? It's essential for preparing the product. We're not going to get the watches on the shelves unless they're in the presentation packaging. It's going to apply to each item, and we'll know the cost of that packaging in advance. So direct costs there as well. Okay, what about the protective goggles? Do we think that's a direct or indirect cost? Yeah, indirect cost. It's a bit like the polishing cloths. We don't know how often those goggles will be worn. We can't really predict the cost of them and how much that cost will relate to each smartwatch that's produced. And then finally, we've got aluminosilicate glass. So that is the glass that goes on the face of every watch, direct or indirect. Yeah, that's right. Our watch isn't going to work, is it? Unless that is it's an integral part of the product that's being produced. It's essential. It will apply to every item, and it will be identifiable, and it will be able to identify the cost of it in advance. Perfect. Thank you for that. I can see everybody's got the hang of that there. Brilliant. So as well as classifying costs by element and by elements and by nature, sorry, lost my way there for a moment, we can also look at, a business may also classify its costs by function. So if it's classifying costs by function, it will split costs between different areas of the organisation. Now, this is something that you might be familiar with from financial accounting. It is the way we tend to break down costs in our statutory financial reports as well, but we also use these areas within management accounting. Production costs are incurred during the production of a product or a service. Any other non-production costs can be split between selling and distribution, administration and finance. Some businesses may have other categories depending on their type and size of the business, but they tend to be the main ones. Okay, so production costs might include the wages of staff making the product or providing the service, as well as those supervising. I'm going to come back. I can just see a question popped up in chat. I'll just finish this slide and then I'll come back to that. Okay, so just lost my thread a bit there. So production costs, yeah, will include wages of staff making the product or providing the service, as well as those supervising them. All materials used in the production process will be included, along with other costs relating to production, such as factory rent and insurance. Selling and distribution costs come from the activities relating to selling and marketing the product and distributing the product to customers. So, for example, the costs of advertising, the advertising campaign, or the wages of the delivery driver. Costs relating to the admin function will include head office costs, along with such as HR costs and IT support. And then finally, finance-related costs will include overdraft and loan interest, along with any bank charges. Okay, so I can see there is an answer there in the chat box, which is great. Thank you for that. Yeah, a business can choose whether or not it includes overtime within its direct costs. Usually the way to do that, as somebody has said there, is to split the overtime between basic rate and premium rate. The basic rate, all the hours paid at basic rate will be included as a direct cost. Anything paid at the premium rate will be an indirect cost. Okay, so some examples now of categorizing costs by function. Okay, so we've got some costs on screen and I want you to tell me if these are production, selling and distribution, admin or finance. So are the raw materials, do you think, a production, selling and distribution, admin or finance cost? Again, just put the initial letter. Perfect. Yeah. Okay. We'll need the raw materials to produce the products, don't we? They're going to be included within our cost of production. Salaries of office staff. Okay. Production, selling and distribution, admin or finance, do we think? Yeah, we've just said office staff here, haven't we? We haven't said that they are working in the finance team, so we'll assume that they're part of the admin function. Marketing managers, company car expenses. Do we think this is to do with production, selling and distribution, admin or finance? Yeah, the marketing manager is going to be working within the marketing department, so it's likely any costs relating to him will be included within that functional area. So we'll include our marketing manager's company car expenses within the selling and distribution expenses. And then finally, loan interest. Yeah, it's going to be a finance cost, isn't it? It's relating to how the business is financed. Excellent. Okay, thank you for that. Let's just pop those up on screen. Perfect. So finally, we're going to be looking at classifying costs by behaviour. So this classification looks at classifying costs according to their behaviour. So what we mean by that is how costs behave or change in relation to varying levels of activity. And by activity, we mean the number of units produced or the number of services provided. Predicting whether costs will increase, decrease, or stay the same across differing levels of activity is useful when it comes to all areas relating to management accounting, be that planning, decision making, and control. And it's important to note that while all costs will change over time, what we're considering here is the behaviour in the short term in relation to activity. So variable costs, when we think about variable costs, we are saying that some of our costs change in direct proportion to activity. So think about a bakery. If it takes 1 kilogram flour to make a loaf of bread, we'll need 2 kilograms of flour to make 2 loaves of bread and so on. The cost of flour is increasing as the number of units increase. However, if the cost of making that single unit will be the same for every unit produced. Fixed costs don't change with activity. They remain the same regardless of whether the activity goes up or down. An example of this is rent. In our bakery, the rent of the shop will be the same whether 1 or 1,000 loaves are made. As a tip, if the cost is based on a time period, then it's likely to be fixed. For example, the annual insurance premium or the monthly rent. The key point to remember about fixed costs is that because our fixed costs don't change, the more units we produced, the lower the cost per unit will be. And we'll look at an example to illustrate that in a moment. Semi-variable costs contain both a fixed and a variable element. So, for example, the cost will include a fixed amount, often based on a time period, and then a variable amount that changes with usage. As activity rises, the semi-variable costs will also rise. However, if we calculate it at a unit level, we'll see that as activity rises, the cost per unit will fall because the fixed element is being shared out between more units. Step costs are costs that remain fixed up to a certain level and then step up to a new cost. They will then remain constant till the next level, till the next change in level, when the costs will step up or down again. So, for example, a business may rent a warehouse in which 10,000 units of product are stored. If more than 10,000 units require storage, a second warehouse will need to be rented. So that's a step up. We'll need to pay rent on a second building. So it will be double the original amount. The amount will then remain constant until, say, 30 units need to be stored, in which case a third warehouse will require storage. I would suggest there that business needs to perhaps start selling things, then it wouldn't need so much storage, but that's a different story, isn't it? Okay, let's have a look at, again, some examples. So I've given you the different examples there: variable, fixed, semi-variable, and stepped. And this time we are considering a business who make fruit cordial, so fruit squash. You can classify whether or not, or state whether you think the following costs are variable, fixed, semi-variable, or stepped. So fruit concentrate, do we think that concentrate will change with activity? So the more bottles of squash that are produced, do we think that that cost will change directly with activity? Yeah, it's a variable cost, isn't it? What about the electricity contract? Think about your own electricity contract at home. We've got that dreadful standing charge, haven't we? And then a usage charge. So electricity contracts tend to be semi-variable. Now, I know if you're on a direct debit scheme, you might pay the same amount each month, but then you'll usually have a catch-up bill, won't you, at the end of the year? And that is based on a standing charge, a fixed standing charge, and a variable charge for the amount that you use. So semi-variable there for electricity. What about our production supervisor? Our supervisor can supervise up to 20 members of staff. If we employ more than 20 people, we'd need to employ another supervisor. Okay. Yeah, so it's a stepped cost. The cost will step up. What about an annual maintenance contract, which consists of an annual service charge plus a call-out charge each time a repair is required? Yes, semi-variable. It's got a combination there, hasn't it, of the fixed, the time-based cost, and the usage cost there. And then wages to production workers paid on a piecework basis. Piecework basis means that the employee gets paid for every unit they produce. Yeah, variable. Obviously, the more units that are produced, the higher that cost will be in direct proportion to what's being produced. And then finally, factory insurance. Excellent. Yeah, fixed cost. That's a time-based cost, isn't it? It's not going to change in direct proportion to activity. Excellent. Okay. So once we've established how a cost will behave, we can calculate costs at different levels of activity. So you might come across this type of example in your in the quizzes and in your assignments. Quite often in this unit, you will find that information is presented in this tabular format. So it's worth just familiarising yourself with the column headings and the row headings, just so you can understand what's required. What we've been given here is some cost information relating to different to levels of activity. And we've been provided with the cost for 4,000 units. Okay, we can see there's a fixed cost there, a variable cost, a total cost, and a total cost per unit. So what you're required to do here is to provide the costs, the likely costs at each level of activity using your knowledge of cost behaviour to help you. So remember, fixed costs remain the same, regardless of activity. Variable costs change in direct proportion to activity. So what do we think the fixed cost might be at 5,000 units? Bit of a trick question there, isn't it? It's going to be the same, isn't it? It's a fixed cost. It will not change with activity. Okay. So what about our variable cost? We can see for 4,000 units, the variable cost was 20,800. So what we want to do here is to work out the cost per unit at 4,000. And then once we've found the cost per unit, we can use that to multiply out at 5,000 units. So 20,800 divided by 4,000 multiplied by 5,000 will give us our variable cost at 5,000 units. Thank you. I can see you're all there ahead of me. Perfect. Okay, once we know our fixed and variable costs, we can add them together to arrive at our total cost. And our total cost per unit will be established by dividing our total cost by the number of units produced. So £42,000 divided by 5,000 units gives us a cost per unit of £8.40. Okay. I'm not going to work through all of this. The session is being recorded, so you can come back and have a look at this and work out the rest of it yourself later on. But for now, I'm just going to move on, unless anybody's got any questions or anybody's not sure about what we've done there. Okay, thank you. So there's the completed example. As we can see, fixed costs remain the same. Variable costs are increasing in direct proportion to activity. And then the total cost can be divided by the number of units to establish the total cost per unit. You'll notice that our total costs are also increasing as activity increases. The cost per unit is going down as the fixed element of that cost is shared out amongst more units. And I just want to illustrate that in a little bit more detail on this slide. Okay, because it's important when we think about, when we're describing these costs and cost behaviour, we are describing really the behaviour of the total cost. Okay. We can see with the fixed cost, the total cost remains the same, but that means the fixed cost per unit will decrease as more units are produced. Okay, that's in direct contrast to variable cost. With the variable cost, we can see that cost is varying, can't we? That total cost varies, it changes at different levels of activity. But have a look, the cost per unit of a variable cost will stay the same. If you think about that loaf of bread, each loaf of bread will still only take 1 kilo of flour to make. And if each kilo of flour costs £1, the variable cost for each loaf of bread will just be £1. So it's the same for each loaf that's produced. So just remember that when it comes to answering questions about cost behaviour. Okay, so with this particular example, we have been given some information here. We've not been told what the cost is. We've been given some data, and we've been given some cost information here. And we need to use that to help us to identify the cost behaviour. Okay, so to do this, we need two pieces of information. We need the cost and the level of activity. The best approach is to look at the information provided and then calculate the total cost at each activity level. If the cost per unit's been given, if it's the total cost that's been given, calculate the cost per unit, okay? And that will help you work out what's going on. Okay, so I'm going to pop this on a slightly bigger screen just to make it a bit easier for us. So if the cost of producing 250 units is £4.80 per unit, and the cost of producing 400 units is £3 per unit, what do we think that cost might be? Okay, we can see that cost per unit is going down, so it could potentially be a fixed cost, you're right. However, if you think about semi-variable cost, that cost also goes down, doesn't it? So we don't know for that, we can't really tell without doing some calculations what the cost behaviour is here. So let's calculate it out. We know what the cost per unit is, so let's calculate the total cost at each level of activity and then compare it. That will help us to determine what the cost behaviour is. So we can see there, if we multiply that out, that the total cost at each level is actually 12,000. So that tells that this cost is indeed a fixed cost, as a couple of you have already identified. Well done. Total amount is the same at each level of activity, so the cost per unit is decreasing as activity increases. In this particular example, we've got total cost information. Costs are 3,150 at 700 units, but at 400 units, the cost is 1,800. Okay, so the costs are increasing with activity, but are they increasing in direct proportion? Okay, is this a variable? Is it a semi-variable cost? Again, it's worth calculating this out. Calculate the cost per unit, and that will give us a bit more information. Okay, so 3,700 units, the cost per unit is 450, and at 400 units, the cost is 450. So this tells us that this cost is a variable cost. The cost is increasing in direct proportion to activity, so we'd class this as variable. In this case, we have got some total cost again. We can see that the cost is increasing with activity, but again, is it increasing in direct proportion to activity? Again, if we calculate out the cost per unit, that will help us. Okay. If the cost per unit is the same at each level, then we know this is a variable cost. Yeah, so if we calculate this out, we can see actually the cost per unit is going down the more units are produced. So that tells us it can't be a fixed cost because the cost is different at each level of activity, but this is actually a semi-variable cost. Same amount of variable cost in each unit, but the fixed cost is being shared out amongst, so the cost per unit goes down the more units that are produced. And then finally, I think we can probably guess what this one is, but just for completeness, let's have a look. So production level of 4,000 units, the costs are £1,000. At 6,000 units, the costs are also £1,000. And at 8,000 units, those costs have jumped up, haven't they, to 2,000. That's it. It's got to be a stepped cost, hasn't it? So thank you for that. Okay, no need to do any calculations. We can see that that cost has remained level for 2 levels of activity, and then it's jumped up that 3rd level of activity, indicating it's a stepped cost. Okay, so I can see time is rapidly going down. We might not cover everything we'd planned to cover this evening, but we'll keep going and see where we get to. We can always pick up with this in our next session next week. Okay, now, although on this next slide, we're not looking at traditional methods of cost classification. The AAT learning outcomes have also included a knowledge of product and period costs, so just recognising what they are and what the difference is between them. So we'll just cover that briefly. So as I said, not a traditional method of classification, but a business might choose to classify its costs as either product or period costs. As we know, one of the main aims of costing is to help the business to calculate how much it costs to make each unit of product or service, and we refer to this as the product costs. Product costs might be shown on a cost card. Let's have a look at one of those. And this cost card will include all the costs associated with making the product. The cost card shows us the amount of material, labour and direct expenses used in making a single unit, as well as a share of the overhead or indirect cost of production. We'll look at how to calculate the amount of overhead included in a moment, or possibly on the next session. Period costs are costs that relate to a particular time period, okay, so not to production. For example, that might be the annual loan interest or perhaps a monthly advertising subscription. Period costs are transferred or charged directly to the statement of profit and loss. They're not related to producing the product or service, so they're therefore not included in the cost card. So let's have a quickly look at some examples just to see how this applies in practice. So I want you to identify which of the examples for Flat Pack Limited, company manufacturing flat pack office furniture, do we think the following are product or period costs? Okay, so think about, is this item going to be used when the product is being produced? That's all we need to ask ourselves with this. So dust masks for factory workers, will we need those, do you think, when we're producing products? Yeah, it's a product cost, isn't it? Timber and glue. Yeah, fine to put PR, that's absolutely fine, and PE for period cost. What about the delivery vehicle expenses? Is that to do with production, do we think? Or could that be yeah, that's not going to relate to our producing our product, is it? What about the finance director's salary? Yeah, finance director doesn't tend to get involved within with producing the products, so it won't be a product cost. The assembly line supervisor. Yeah, the assembly line is where the flat pack furniture is the packaging is assembled. So the supervisor will work in that area. So yeah, his cost, we'll want to include that within our product cost. And then finally, our period cost. Finally, our cloud accounting subscription, product or period. Yeah, absolutely. We'll use our cloud accounting to produce our accounts, nothing to do with producing the product. Perfect. Okay, thank you for that.